and welcome to another episode of the Breakthrough Work podcast. I'm your host, Ravi Kumar, partner and national market leader at Connor Group. Connor Group is built for breakthroughs. We're a professional services firm focused on the most critical opportunities and challenges facing ambitious companies. Breakthrough Work lets leaders and companies who shatter the status quo tell their stories about getting to the other side. My guest today is Erik Zhou, SVP Finance and Accounting at Brex. Erik has been part of Brex's journey for over 7.5 years, helping build one of the most sophisticated finance functions in FinTech. Most recently, he's been at the center of one of the most consequential deals in the financial services industry, Capital One's acquisition of Brex, the largest FinTech acquisition in U.S. history. Erik, welcome to the show.
Ravi, thank you so much for having me. Yeah, I've been looking forward to this.
So let's start with the top, the headline. Capital One's acquisition of Brex for $5.2 billion. It's been called the largest FinTech acquisition in U.S. history. When the deal was announced, what was the feeling inside of Brex, and when did the magnitude of this moment truly sink in for you personally?
Yeah, the deal was announced in January, right after their earnings release. And internally within the company, I think there's a range of emotions, if I'm being honest, for a lot of people that, especially those of us that have worked at the company for a very long time, 7+ years, some of us 8+ years, building this company to where it got to and having that moment arrive. There's definitely a lot of pride there. Like, we built something from when we were, whether it's 20 employees or 50 employees or even 100 employees, till now this massive, this business that is able to be acquired by Capital One, that acquired their interest, so to speak. So there's a lot of pride there. I think separately, just like strategically, for a lot of folks who have been building this up and trying to scale the business, where we were coming up against, I would say, not necessarily problems, but like the hurdles of every growing business, where you're trying to scale distribution, where you're trying to scale financing for your financial services business. We're ultimately a lending business with our card, where you're trying to scale things related to compliance and regulatory issues that we ultimately come up with because of the scale that we grew into. Capital One has all that scale, and we just plop it in and not re-accelerate, but further accelerate our business going forward. And that was the first instinct for a lot of people that had been at the company for a long time. Having been with the business, having grown it to where it is, that was the first thing that a lot of folks thought of.
Yeah, and I might go a little out of order on my question, just playing off of something that you just mentioned, that this acquisition brought a dramatically lower cost of financing, stronger relationships. Some of your channel partners became, resellers, or, customers became distributors. And it really changed the way that, Brex views the ecosystem. What does that transition look like? And, how do you feel what Brex brings to Capital One, and what does Capital One unlock for Brex?
Yeah, I mean, you mentioned a couple of the things that are very clear. Structural things related to our margin profile that we get the benefit of literally on day one. So first day, we get to benefit from the fact that Capital One has this deposits base and the cost of financing that it has for all the assets on its book, which include now our card receivables. So that's a big deal. On the MasterCard side, they obviously have a huge relationship. They're the number one card issuer in the U.S. They're the number 6 bank in the U.S. in terms of assets. And that brings with it a level of, dynamics with regards to their relationship with MasterCard and other networks that we also get the benefit from in the span of time. And then I think, to answer your question on what other things beyond those structural elements that Capital One can bring to us, they're a huge distribution engine. I think about what they spend and what they're able to spend because of the size of their business on distribution. I am really looking forward to being able to leverage that kind of distribution scale for our product across all the businesses in America. That's the ultimate dream at Brex, and that's what we've always built towards, and that's what this deal really accelerated in our minds visually for us as a possibility. I think the things that Brex brings to Capital One, if you think about the corporate card industry over the last, call it 10 years at this point, one thing that Brex has always been the pioneer of was, hey, here's a corporate card. This is a corporate card that maybe we have a little bit of one up on like other competitors just because of the way we were underwriting certain customers and being and able to provide limits to customers in a more seamless way versus what they were experiencing before with a personal guarantee requirement or doing a FICO underwriting. Like if you were a startup and you had and sometimes as a startup you're either very young or you're not even a US citizen sometimes.
Yeah.
Right. You don't have enough credit history on your own when you personally guarantee that corporate card line to get a limit that you need to even put your AWS spend on the card on a monthly basis. And
Wow.
really what some of those folks were doing was trying to just get a card open so they can manage their payments more easily. For a lot of
Yeah.
tech companies, especially in the Bay Area, you got your AWS bill. Now you got your Anthropic or OpenAI bill. You got your bills for different SaaS products that you need for your engineering crew. You got, a lot of that stuff is with vendors that accept card. And you want to just leverage that payment because it's just an easy way to put your card number down. You get a monthly charge on the card, set it and forget it. But instead, if you don't have a high enough limit, you have to do the bank thing. You have to
Yeah.
send an ACH. You have to get an AP person. You have to do all this other overhead that just like takes up space in your mind when you're only a
Yeah.
team of 5 or 10 people, if that makes
Right.
sense. And so,
Yeah.
Brex brings to the table underwriting methods that we championed early on that I think is going to be additive to the overall book of Capital One. And the other thing is like we partnered that with all the technology platform and spend management tools that we've developed. And so that's the direction that the corporate card market has been going from what we've seen. And we can't wait to bring that to the Capital One business base.
No, that's awesome. And I always think about, current state to future state. And, Brex is the scrappy startup reinventing corporate cards, right? When I joined Connor Group, we were 120 professionals in a handful of markets. And, when we made that transition to 700 professionals in every major market, and I heard from clients, oh, well, we're not ready for a firm the size of Connor Group. I'm like, wait, we're the scrappy startup still. And
Yeah.
that's the lens I still, view our firm. When you complete a transaction like this and you're now one of the largest financial institutions in the industry, how does that shift the company's identity internally? Are you guys like, no, we're still cool. Like we're dressing, to impress and, we still look at ourselves as the new kids on the block? Or does that shift the identity, almost like a pre-IPO, post-IPO cultural shift?
Our identity in the market, I think, has held strong. And the way we operate has held strong. Like we are still keeping our roadmap. We're still covering all the clients that we've gained over the years and the ones that we're hoping to gain in years to come in the same way. And from that perspective, scrappy, yeah. I mean, at the end of the day, you tell me, right? You grew the practice from 120 folks to 700 folks. There is a shift that happens, I think, when you get to a certain size. Like, I think you know what I'm talking about. Like,
I got you. Yeah.
I remember when I joined Brex and we were 70 folks and we were still on QuickBooks, and the amount of jobs and hats that I had to wear when the company was 70 folks is just a little bit different than now when the company itself is like, I think we're about like 1,300 folks at this point
Yeah.
on a little business unit. And those are transitions that I think are necessary for the company, right? At a certain stage, it's healthier for the company when certain functions or individuals focus on their core responsibilities, right? Where you just get a higher quality of output and work that is needed when your company's more mature and there's more at stake and all these things, right? Now, did the Capital One acquisition change anything about how we operate and the way we go through decision making, the way we go through our critical analysis of our customers? I think it's two things. One, the answer is actually no.
Okay.
right? Meaning we still look at our business the same way. We're still growing in the same way with a combined financial services and technology solution that a lot of our customers know and love. Um, but the second thing is that I won't lie when I say like Capital One and their resources and the way they see the vast economy that is the United States is helpful.
Yeah.
Like for them to be in the room to tell us things that they're seeing in the market with their customers, for us to be able to leverage that into our business, I think that can only be beneficial as we strive to create, the number one financial services company for businesses in America.
Yeah, and you touched on this briefly, but is Capital One's acquisition of Brex the traditional build versus buy type, decision? Or does Brex literally change the fabric of the organization and is a catalyst and a platform for which Capital One is going to roll out throughout the organization and forever changes the identity of one of the largest financial institutions in the company? I'm not trying to overstate the gravity of this deal, but I also don't want to minimize it, right?
Yeah, that's a interesting question. Um, and we literally just closed a little
Yeah.
bit
Maybe
like about
it's
a month
we'll
ago
do
in
a
April.
follow-up
Yeah.
episode.
Um, and for whatever it's worth, we are getting started on strategic integration work and what this business looks like combined with Capital One over not just the next year, but over a much longer time horizon, whether it's 3 years or even 10 years.
Mm.
But I think I can't really say exactly
Yeah.
how that's going to go just yet, if that makes
No,
sense.
I think
Yeah.
you touched on really well of what Capital One changes for Brex. And I think what Brex changes for Capital One is the to be continued story that time will tell, right?
Yeah. I will say this, and I'll reiterate just things that I said already with you, but it's like just 100% true. We are not changing our roadmap and what we're building
Exactly.
for management, right?
Yeah.
The way that we are able to add new use cases for our customers to spend with a card versus traditionally with an ACH and wire.
Hmm.
And that's something where, like, by putting a payment rail or using card as a payment rail for certain of their spend, um, honestly, they get a real economic benefit in terms of using card, right? Rewards are a real thing that
Mm.
lights up the eyes of a lot of the procurement customers that we deal with on a day-to-day basis. And the other piece is like the controls that we're able to apply with our spend management platform. Um, you know, with the way that we've set up our platform, a procurement person in combination with the card management, like card program manager at a business, they're able to combine forces and like figure out, okay, I'm going to give you a virtual card. You can use this virtual card to spend on XYZ vendor. You will get X% rewards back. Great. Oh, by the way, I have the controls in place so that when I use that virtual card, it can only be used for this vendor.
Yeah.
I don't have to do all the other controls payment by payment before I send this wire, and often you go, right? And it
Yeah.
just eliminates a lot of that process overhead that a lot of companies deal with when they're dealing with wires or ACH payments in their AP department. Now that AP department kind of sets up this virtual card for you to just is it exactly like set it and forget it? No, but it's pretty close. Like, hey, here's the budget, here's a virtual card. This virtual card can only be used for this vendor,
Right.
and it's like an automated payment, basically.
Yeah. Yeah.
And it's wonderful. I think for a lot of folks, all they're doing is trying to improve their quality of life,
Yeah.
right, at the workplace, and that's
Absolutely.
what we strive to bring for all of our customers.
Well, it's funny, and I'm gonna use this as kind of a difficult segue to the next topic. But you started in public accounting at PwC. I started in public accounting at KPMG. I remember first day at work, they gave us our Diners Club card, and I was like, what the heck is Diners Club? And it was accepted at 30% of the places I actually tried to use it at. And how far we've come in the world of corporate cards and expenses and everything else. It's a pretty incredible journey, and to think that something as trivial as corporate cards back then could be such an impactful innovation and disruptor for the industry is truly incredible.
I mean, it's just come such a long way in terms of the technology around it too.
Yeah.
Now I got Apple Pay.
Yeah.
And I can put my Brex card on it. I put all my cards on it, like whether it's my personal Brex or whatever, what have you. And now do I even need my wallet anymore? I need my wallet to carry my ID, right? My driver's license.
Right.
But honestly, all the other stuff that I have in there, like a little bit of cash, a little bit of like maybe my insurance card, like I do everything on my phone, and I can't send a wire through my phone though when I buy a cup of coffee.
Yeah.
I can't do that. And so the innovation that's been available because of the card underlying infrastructure technology, I think has been really great. Like that's like an industry comment in terms of like payment rails and how consumers and really anyone makes payments in the US. But that's that's the wonderful thing about all like MasterCard, the card network industry in general.
Oh, for sure. I mean, we've come a long way from the George Costanza wallet. For our audience members that remember that episode on Seinfeld where he's got the wallet that explodes with receipts, to the little sleeve that attaches to, your phone that carries a couple key cards and your ID and some cash. So I'm trying to make my way to the more sleek wallet. It's come a long way, but we're getting there. Going back to your transition, I mean, you spent 12 and a half years at PwC?
Almost 12 years, yeah.
Almost 12 years.
Yeah, a little over 11, yeah.
And as a recovering auditor myself, that world has revolved around getting to the right answer, materiality thresholds, define your world. How did you recalibrate for your role at Brex, which was your first role in industry after public accounting, and you stepped into this high velocity, ambiguous world of a startup?
Yeah, it was a big change. I still remember my first journal entry, and it was like a lease journal entry. And I booked it, and it was in QuickBooks, right? So I had never actually booked a journal entry or done anything like that in QuickBooks before. And then I put the numbers in. I attached a file because you're still able to do that. You're able to attach a support to a journal entry within QuickBooks. And then I pressed enter, and there it was. It showed up in the P&L. That was it. Mm-hmm. No review. No review, no nothing, just like, an Excel sheet in a attached file within a journal entry, and then it shows up in a P&L. And I think like couple of things, that first month was a huge learning experience for me because I had to kind of get my mind right really quickly. If I were to input a journal entry for cash for something, there's no one else to review it. It was me and one other person. And then that person was running all the other stuff, like, AP, payroll, helping out with journal entries, doing other cash recs, like doing revenue recognition and all that. And the fact is, like, the control is yourself when you're when you're that small, right? We didn't have the scale of a large bank or any large company where you have a larger accounting team and where you have to have actually required to have checks and balances and controls, and for almost every layer of the process where the journal entry has to be prepared by someone separate from the reviewer. Then there's a reconciliation. That reconciliation preparer is sometimes someone different, and the reviewer of that reconciliation is also someone different. So now you got 4 people in the process for one particular transaction. And then, oh, by the way, you do a variance analysis that's prepared by someone in finance, but then ultimately reviewed by the CFO. And so like 6 people, right, involved in the process, that all mitigating controls, by the way, that stack on top of each other, that create the strongest net that you could possibly create to prevent leaks and mistakes from getting through. And that's great. And it would be such a luxury to some extent to do that, so that you could ensure as accurate a financial set of financial statements as possible. But when you're really small, and when you're coming out of public accounting and you're coming into this world where you're in QuickBooks and you're the only accountant or one of two accountants, you are your control.
Yeah.
Then all the books and records that you put together are aggregated or compiled into the financial statements. And then the second control is that like you and the CFO look through the numbers as a whole to see if that makes sense.
Mm-hmm.
That's the second control. Like I can't tell you how many times the bigger discoveries that we've had aren't really from the day-to-day minutia of the work related to one journal entry or one
Yeah.
workbook, but it's when someone takes a look at the performance as a whole and it's like, that doesn't make sense. I thought we launched that revenue line, or that doesn't make sense. We didn't launch that revenue line yet, or that doesn't like, you know what I mean? Like it takes someone also with like this level of more intimate knowledge of what's going on with the actual business and reconciling that versus what the numbers are telling you. And that to me is the stage that's like way more important because at the end of the day, like, you know, we all, especially CPAs and et cetera, like that are trained, like we're all trying to, right, produce a set of financials that not only are accurate, but are useful.
Yes.
They have to be useful for management to take a look and make critical decisions on where to go next. And that's the thing that's the thing I had to get my mind right about.
Yeah. Reasonable assurance that they're free from material misstatements and omissions, I believe, is the terminology and the credo we used to live by in our audit days, right?
Right. Yeah.
Well, I love the saying that you know, perfection is the enemy of good enough, right? And we, you know, you and I are both perfectionists in kind of our training and what's been ingrained in us. How did you make peace with that mindset of, you know, perfection is one, probably not attainable, and two, is not going to allow me to be effective in my role in this new world of being in a startup? How do you make peace with that, you know, internally, given everything that you've been trained on prior to that was, okay, like I need to tick this, I need to tie this, like, is this initialed? Because that initial means that it's been reviewed. Like, it's a different world, right? So it's a shift in mindset.
It's a shift in mindset, but it's also a calibration that gets like that as someone who wants to, as anyone who wants to be successful, right? If you're that kind of person, you will adapt.
Yes.
Depending on the situation that you're in. So Ravi, when you were an auditor, certainly when I was an auditor, right? My measure of success was going through the audit checklist, compiling the audit work papers so that my senior associate or my manager or my partner and all the layers of review could take a look through and feel comfortable that what we're signing off on in terms of our service to the customer and delivery of that opinion to the customer, they could be comfortable with.
Yeah.
Right? That was my measure of success. When you're in industry and you're now doing all the books and records, getting through the audit is part of my set of responsibilities, right? Also, like I need to get the books and records in order so that we can get a clean opinion from XYZ audit firm. But it's only one part of the whole pie. And a vast majority of the pie isn't getting through the audit, but it's putting numbers together in a timely fashion, right? That are credible and helpful so that we can make decisions on whether or not this strategy is working out, or like if it is working out and it is successful, understanding why it's successful so we can double down on those kinds of things. And that became the measure of success. The measure of success is no longer as a service delivery provider for the client that's kind of based on like the review of your work by your manager. It's now like advising the executive team on what's happening actually with the numbers. Like, how do I think about the revenue? Like, what's the actual revenue? The revenue is not the cash in the door. Right. That was the upfront payment for an annual contract. So you got to think about like expenses, like it's that kind of process where we're advising on like how to manage the finances of the company so that it's sustainable, so that we're building towards something, um, so that we're actually able to like achieve the dreams that we have, so to speak.
Yeah. Well, and a big part of that is understanding who your key stakeholders are and how does your role better enable them to achieve what they need to do, and how do you enable them to be successful in, their obligations and their commitments to their stakeholders, right? So,
Yeah.
no, I'm glad that you talked about, that mindset, and we oftentimes say, even when auditors leave public accounting and come into Connor Group, we say that you're not looking over someone's shoulder to make sure that they did something correctly. You're really now in this trusted advisor role. And how do you serve as an extension of management to really help them be better at their jobs, to make sure that the end result is something that we can all be proud of? And so, it is. Sometimes it's more difficult for some than others. And the quicker that you can shift into that mindset of like, I am a trusted advisor now, I'm not effectively a compliance, a professional, it just makes everyone's life easier.
Yeah, totally. Right. When you're advising your clients and they're getting ready for audit, et cetera, I would imagine that you're kind of serving almost as like maybe not a direct intermediary, but like as that advisor for someone in the finance function or accounting
Mm-hmm.
function that may have been out of audit for a bit already, right?
Yeah.
Again, getting through the audit is only a piece of that person's
Agreed.
life for the year. They're
Yeah.
kind of like, you know, at the end of the day, the financial performance of the company has already been reviewed by the company, and like decisions have already been made. Now you're trying to just get through the audit for certain things. And certainly the audit provides a lot of value, by the way. There
Yeah.
have been the situations where the auditor has shared with us like, well, this is like actually the range of practice on how something is presented. And then it's actually interesting way to look at the business that they bring to the table. But I think oftentimes it is getting through the audit and like you're trying to manage the business like for the most of the time. That makes sense.
Yeah.
Yeah.
No, absolutely. I mean, I hate to minimize it, but it ends up being
Yeah.
a tick the box exercise of like, hey, the audit is a necessary evil, if that's a terrible word to use. But we got to get it done. But really, you can't have the tail wagging the dog. The success of the company depends on the revenue engine, and making sure that the business models is valid. So,
Yeah.
one of the things that I love is your introduction to Brex. For me, my network is one of my most valuable assets. Your introduction to Brex was through the CFO, Michael Tannenbaum, who's now the CEO of Figure. Tell us about that connection and what it taught you about the power of relationships and career navigation.
Yeah. I think like, and maybe you can attest to this too, because you just mentioned your network, et cetera. But I think for a lot of folks, your success in the working world, certainly in corporate America, there's a big part of it that's driven by you yourself, right? It's your own
Mm.
ambition, it's your own work ethic,
Mm-hmm.
it's your own intelligence, and all these factors. But then you you don't go it alone. No
Yeah.
one goes it alone. No, like in so many um, paths that they have, whether it's on an individual work stream or whether it's your general career, right? And so my relationship with Michael was one that I built when I was an auditor and he was a client of mine. He was the VP of Finance at SoFi. And those were the years when SoFi was really taking off. Like this was back in 2015. They were just raising,
Yeah.
I think it was their Series E at that point. Um, and I learned a lot on that job, right? Because I have been working at only multinational
Right.
established financial institutions, like doing audits for those clients before. And this is my first time seeing like how a company could be built from the ground up, albeit from the auditor's perspective. And all the decisions that they were going through, I was privileged to kind of just be a part of that,
Yeah.
to get to get my first experience with a company doing a NetSuite implementation and making decisions about why their chart of accounts and their GL code structure would be structured this way. And I learned a lot like, oh, that's why companies have 6 digits and each digit actually means something like,
Yeah.
and there's this rules. And anyway, I think through that process, like just being on the ground floor, so to speak, as that company was being built, and establishing my relationship with Michael was like super important, because obviously later on, when he took on the CFO job at Brex and they were about to raise their Series C, they wanted to like start establishing the accounting and finance function in the way that he was used to from his previous
Yeah.
job at SoFi, and thankfully he thought of me and reached out to me. Um, I would not be where I am today for that relationship.
No,
100%.
that's awesome, and we all have those, mentors and folks that have created those critical inflection points in our career. And this kind of segues into the next topic that I have, which is, now you tell someone you've been somewhere for more than 4 years, 5 years, right? They're like, oh my gosh, like how have you been there this long? And 7.5 years is a pretty remarkable tenure in a fintech, in a tech company in Silicon Valley, and the Bay Area ecosystem. What kept you at Brex through all of these pivots, the scaling moments, and ultimately the acquisition? And what did you get at Brex that you didn't get anywhere else, or you couldn't get anywhere else?
Well, I was at Pricewaterhouse for over 11 years,
True, I know.
and I've been at Brex for 7.5, almost 8 years by the end of this year. Um, and maybe I'll answer this question from a different angle, which is how Brex, uh, one of Brex's values. We have 6 values. It's like one of them is dream big, but another one is owner's mentality. And we interview for that. Like we try to discern in the interview process if you have this trait or character trait about you, which is like owner's mentality. You demonstrate that when you join an organization that you will operate as if you're an owner. And and that's like just how I'm wired. I don't know.
Yeah.
Like I went to PwC, and right out of college, and I spent a long time there, and I grew up through the ranks and learned all this kind of stuff there. And really every year, maybe every 2 years, I just like had a new level of ownership and a new
Mm,
level of scope and responsibility. And that's what I really enjoyed. I really enjoyed just like establishing the breadth of my experience and what I was growing into, like in terms of a know-how on how to handle different situations. And
yeah.
that's what I also received at Brex. And so the thing about Brex is like I got in, like we were 70 folks. I was one of 2 folks on the accounting team. And then over time, what ended up happening was like, well, the company was growing. And as the company was growing, there was more things to do and more scope
Yeah.
that, was available. And I'm also the person where like, even if that scope is just out there sitting there, I'm like, I someone should care about that.
Yeah.
Someone should care, right? That we're opening all these bank accounts and like we're still like managing all the access and all that through a spreadsheet, right? Someone should
Absolutely.
care that when we get invoices in the door, that we don't really have that organized a way of handling all the invoices and the due dates and running our vendor runs like in an orderly fashion so that we're managing cash right
Absolutely.
in a smart way and liquidity week to week in a smart way. Someone should care that we need an accounting policy for depreciation,
Yeah.
you know? And those are the things where like I was afforded the opportunity to just show how much I care and then like run towards the things that I saw needed someone to look after. Um, and those are the things that like push me to stay because there's always something to do, I
Yeah.
think. And that's really in any org, right? And if you have that
Yeah.
mindset, it can really benefit you greatly. And I think especially at a company like Brex, where we grew so much so quickly, have grown into different products, have grown into different segments of the market, it kind of like geometrically expands the scope and responsibility to some extent.
Yeah.
And that's always been really exciting. And it's still exciting today.
Yeah, well, look, I'm asking the question a little tongue in cheek. In my 20 plus year career post college, I've only worked at 3 places too. So I feel you, and you and I are wired very, very similarly in that regard.
Yeah.
And,
I mean, so I'll say one thing too, like, um, this is something I saw or learned from a few partners at PwC.
mm,
But we always felt like when you got onto a new audit engagement, you had to stay at least 3 years.
Yeah, I agree.
Right? Because that first year, you are only just starting to meet the client and establish some relationships. You're
Yeah.
kind of getting a surface, especially as a manager up, right? You're getting a surface level view of like all the scope and work that's being done and the strategy for the audit. The next year is like, I learned what's going on this engagement. Now that I've learned all that, I want to put my fingerprints
Yeah.
onto the engagement. I have my own views on how to do something more efficiently, or where there's actually more risk than we had originally thought, or where we can actually take the pedal off because the client's controls are XYZ, right? And so you work through that second year implementing your vision, and certainly as a manager, I'm talking about this from that
Yeah.
perspective. And then in your third year, you see the fruits of your labor.
Absolutely.
By the third year, hopefully, like the learnings that you had in the first year, the implementation work that you had your second, now you got the engine going and it's all running hopefully more smoothly and all that stuff.
Mm-hmm.
And so that 3-year cycle is super important for both the learning, the implementation, and the realization from those learnings. And then you kind of repeat the cycle. But as a result, I kind of apply that also. I've obviously stayed way more than 3 years at any company, but
Yeah.
for anyone that's like moving into a different job or et cetera, I kind of think the same thing. It takes that first year to ramp up to some
Well,
extent.
and to your point, even in an organization, like a rapidly scaling, tech organization, the fabric and the identity of the organization changes so quickly to where almost each year feels like a different job because you have new challenges, new coworkers, new customers, new relationships that challenges that you're facing that you need to tackle. So as long as I like to say, as long as things stay fresh and you're constantly thinking, how can I, solve these new problems? It keeps everything fresh and exciting and interesting.
100%.
Now, diving into the finance function at Brex, you've described finance not only as just a reporting function, but also as a steward of data across the entire organization. Financial data, KPIs, business shape, growth drivers. How do you actually operationalize that vision?
Um, One of the bigger components of all that is actually how close we are to the data organization at our company.
Mm-hmm.
So we got a finance team. That finance team is split up across like corporate finance, strategic finance, et cetera. But then we have a separate data org, and that data org is responsible for a lot of data.
Yeah.
I'll just put it that way.
Yeah.
Right? But for any individual customer, right? There's the firmographics of that customer, what market they sit in, blah, blah, blah. But it's also like what they spent on in the card, what their attach rates are to various features that we've launched over the years. And then that data needs to be structured in a certain way so that when the company uses that data for analytics or et cetera, we're all using the same kind of like set of definitions and this, you know what I mean? It has to be aligned. If
Yeah.
someone thinks attached to a feature is a different action from the customer versus like what the data team has, then all of a sudden like we have to reconcile that.
Yeah.
Right. And so anyway, for us, the source of truth on all that work is from the data team. And one of the things that I believe it takes for us to be credible with leadership is when we report P&L or financial performance or what have you, that we're able to make it come to life through the structured data that that data team has put together and aligned on with the
Yeah.
rest of the company, if that makes sense. So for example, a lot of the time in our strategic finance team, we are looking at performance for card and why it's grown or why it's decreased sometimes in a certain segment. And we're trying to tie that back to like, are there actions or leading indicators in the operational data that we could have seen that led to this moment? And is it because like, well, they used to have all this attached to the virtual card offering, and like you can see that like they started slowly not issuing as many virtual cards as they did before.
Yeah.
Right? And we can see that before the spend happens to some extent.
Yeah.
right? Because the spend is a later thing and it's almost like a lagging indicator when it happens. But if
Mm-hmm.
someone isn't setting up those cards to begin with, even though they're not being spent or whatever, like it's already a bad sign in terms of like
Yeah.
their attach rates. And it's also vice versa, right? When we see that folks are really engaging in our software and setting up more limits and more controls and leveraging our accounting product and doing automated journal entries and accounting into whatever ERP that they're using, that also tells us like, oh, that's a great early sign that this will be a long-term retentive customer
Yeah.
because they're using
Yeah.
all that stuff. So we're trying to tie in basically like we call it GMV or gross merchandise volume. It's really purchase volume on card. We're trying to tie in how that purchase volume moves month to month with the segments that we support and how that ties into the use of the software, not just like looking at actual spend volume because it's already too
Yeah.
late when the spend volume decreases.
Right.
You know what I
Right.
mean? Like that's an example of us like trying to. I don't want to stewards. Everyone's a steward.
Yeah.
That's an example of how we're trying to make the story more tangible,
Yeah.
right, and
Yeah.
actionable for the leadership team in the company.
Yeah, and I think you shared something about how Brex actually grows, right? You had 30,000 customers, you're acquiring 500 customers per month. But when you're landing customers, it really takes about 9 to 12 months for those customers to truly get up to speed. So current bookings are actually giving you a window into future revenue. How does that insight change how you run the business, manage expectations with investors, and then communicate performance?
Yeah, I think one of the things that we have spent time on in terms of educating all the stakeholders are how the different portions of our business operate and what the shape of revenue looks like.
Yeah.
So for example, we do have a SaaS business, right? We sell a premium version of our software, and it's a subscription-based business, and et cetera. That's a situation where, like, once we get the contract signed, we start recognizing revenue immediately, right? You sign up for 100 seats, 200 seats, 1,000 seats.
Yep.
There's a price per seat per month, classic SaaS subscription model to some extent, and then you get that. But then, even though you get the SaaS revenue recognition immediately, month to month, the implementation of that SaaS and therefore the rollout of cards throughout the company won't be immediate
Right.
because it requires them to actually spend to buy a plane ticket, to buy a hotel, to put their kind of XYZ spend from an operational perspective on the card, and to train up their AP people to like set up virtual cards and all that stuff. And so we have to show people like, well, the sales team has done all this work. This is the revenue we're going to be recognizing immediately because this is the SaaS piece. But then the card piece, which sometimes is like an even greater portion of revenue, will take time. They'll do a few test transactions during implementation period, which is like 2 to 3 months, call it, and then they'll start rolling it out to this department in month
Yeah.
4, month 5, and then they'll roll out to more and more departments and et cetera throughout the year. And then what we expect is by month 9 or up to month 12, then it'll be fully rolled out and we see the full revenue potential of this customer.
Yeah.
And how does that change how we manage? It's really just setting expectations.
Yeah.
Because I think for a lot of folks, the sales team did work. We signed the contract. Revenue just comes in the door.
Right.
And it shouldn't be surprising that it's not $1 million of spend right away.
Yeah.
For example, right? That's part of our job too, which is like to just make sure people understand the I don't want to say constraints, but just the natural shape of a customer life cycle and business.
Agreed.
And we do that so that we can focus our time on the things that we can actually control and not worry about the things that we can't.
Agreed.
Right. That's kind of like my main thing, like just focusing attention to the areas that we can have the most impact.
Yeah. Well, and then they have different focuses on different aspects. You're growing your bookings now for future revenue, but then your future revenue, you're also then maybe shepherding some of those customers. To your point, how do I get them more engaged? How are they setting more permissions? So it's not saying you have to focus on one or the other, your focus is different, and it's kind of a dual purpose of, that 9 to 12 month later, how do you focus on the next 12 to 24 months, correct?
Yeah. I mean, one thing I'll say is when we all realized, like, and this happens, by the way, way more as we went up market.
Yeah.
With startups and smaller companies, especially, they get the card. They're a small company to begin with, so the rollout of the implementation isn't that difficult.
Yeah.
They set up the cards and they put the card number down for AWS or XYZ services, and then they're off and running.
Yeah.
But when you're a much bigger customer and you have your own sales team that you need to issue these cards out to, and they need to get their policies in place for the card usage and all that, it just takes more time. And what that told us was, like, especially as we evolved as a company, the need for an account management team.
Yeah.
We used right we were getting to such a large customer base that we needed to also come up with a system or team to take care of those existing customers and maintain relationships, and also showcase new developments in our software over time, and have that connection point, um, in order for the customer to be successful as we kept evolving. Because I think when you're a customer, maybe you get used to how a platform works, and then your vendor develops something new that's actually really cool and exciting, but you've already
Yeah.
implemented it.
Yeah.
And so what's your how do you more easily understand what's going on with the product? And actually what we found is, like, having actual account management team, being multi-threaded with a customer, talking to all the folks that could make use of it, is helpful.
Yeah. Um, Erik, you played such a critical role in making Brex attractive to an acquirer like Capital One. I've spoken to some CFOs and I've worked directly with CFOs that are focused on, hey, how do I get this company public company ready? And we make sure that we can close the books on time, that we get through audits cleanly, we can do our quarterly and annual filings on time. And scaling a company for an IPO is a different exercise than scaling a company, where I have other CFOs that say, make sure that I pass a quality of earnings and financial due diligence on an M&A transaction. And knowing that exit path is incredibly critical. What specific investments in financial infrastructure paid the biggest dividends that you can think of when it came to making sure that you made it through that diligence process cleanly?
I'd say two things come to mind immediately. The first is just the quality of our people.
Mm-hmm.
We have a super high bar across the company, but and it's not just especially so, but we maintain that high bar also within finance and accounting. And so our accounting team, we look for folks that are, they exhibit owner's mentality, for example, right? That's one.
Yeah.
The dream big one for an accounting is, like, actually dreaming that one day this company will go public, because that's like, and I've heard at conferences that Connor Group runs, like, you guys think of the IPO as a Super Bowl of accounting and finance, right? So everyone wants to try to get to the Super Bowl at least once, right? So we're looking for those kinds of people that are ready for that kind of outcome, and to prepare for that kind of outcome. So that's one. Two, Michael Tannenbaum did something very wise. In the first year of incorporation, we got audited, and not just by a local firm, but by a Big Four. And that set the stage so that at least on an annual basis, we were doing a proper physical, so to speak.
Yeah.
And not letting tech debt on, like, things that we didn't check on, et cetera,
Right.
accumulate over the years. And so we got into the motion that, like, hey, whatever we're going to be putting into the books and records, ultimately, they're not just going to be looking at the numbers, by the way. They're going to be looking at the supporting information and process on how we got to these numbers. And we have to be able to tell a clear story and narrate that process. And so that gave us that forced us into a little bit of more maturity than maybe some other startups during that time. And then I think the third thing that we really focused on from the get-go to make this all tenable, and by the way, it made the diligence process with
Yeah.
Capital One really, like, a lot smoother than
Yeah.
maybe potentially what it could have looked like. I hope, at least. we just spent a lot of time thinking about systems and how to use a system and what kind of system we should be using versus a spreadsheet. If that
Yeah.
makes sense. Right.
Yeah.
So, I talk about this often in other forums, but Brex has the benefit of just being a younger company without the baggage of using certain processes that were established that were great before, but now with new technology, it could be done better. But then the pain and suffering of doing change management from a process that quote unquote works can sometimes be hard to stomach. But we don't have that, so we're on NetSuite. Um, and then we set up all these other tools to help us with our processes, everywhere from payroll to AP to PayP to reconciliations on cash to even on the FP&A side, we have a lot of automation going on there as well now with the
Mm-hmm.
tooling that we have. And so we always went at these processes with an automation mindset. One, I think like in the long term, it's a big ROI on savings, but also like for the people on my team, it's quality of life,
Yeah.
right? We're spending way less time doing the day-to-day BAU business as usual tasks, and we're able to just kind of take more outputs from these systems and do more critical assessments and strategic work as a result.
Yeah, no, that comment is a perfect segue into the next topic. And we live in the world of, AI, the, open AIs, the Anthropics of the world are penetrating all aspects of our life, our work world, our personal world, coming up with travel itineraries on vacation. Um, Part of this is kind of drinking, being a tech forward company, drinking your own Kool-Aid, right? Where is Brex leveraging, AI? I had, one CFO on my last episode talk about hackathons where they built 21 agents that are automating certain tasks. I had I had the VP of Finance of OpenAI talk about if a finance leader is not leveraging AI in finance and accounting, my question would be why? How does Brex leverage AI in finance and accounting?
I think what I've noticed is that there's three primary ways in which AI has been, I would say, meaningfully impactful. Okay. So the first there are now just tools out there where there is an AI feature or agent, et cetera, that's like just off the shelf. Okay, off the shelf, you buy this, it'll do the job that you would have used another system to do, but you had to do some manual intervention or like you would have hired someone to do, et cetera. And that's been magical. So some of these products that are out there in terms of like being able to completely automate a reconciliation without much configuration, by the way,
Yeah.
that's the magic.
Yeah.
The magic is that it's dynamic and that anytime you enter a new set of accounts that you need to reconcile, you don't need to do all this change management and configuration so that that robotic process could work.
Yeah.
You just tell the thing like, this is what I need to reconcile, figure it out. Like I'm making it more simple than it is, but basically that's kind of how it's done, and then it just does it.
Yeah.
Um, that's been great when you can find the right tools that fit your system for your
Yeah.
needs. So that's just one. Basically, like it's an up level of a SaaS tool. It's a
Mhm.
huge up level, by the way.
Yeah.
The second thing is for folks that when you're an accountant, it's not you don't get trained on Visual Basic in Microsoft. Often, sometimes, like it's
Right.
maybe more often than not. And what the AI has, we've been able to leverage AI for is we will actually ask it to help us figure out the automation for something that we were doing in Google Sheets or
Mm-hmm.
Excel. And it would it would tell us exactly the Visual Basic code that I could input into the Google Sheet, and it'll run basically a robotic process automation
Yeah.
for us.
Yeah.
Whereas before, I would have needed some IT
Of
capacity,
course.
someone from engineering or a consultant,
Yeah.
um, and I would have to schedule time, and then I have to do a walkthrough of my current process, and I have to do all the prep work, and then ultimately there's some like UAT testing and like
Yeah.
and then maybe it works.
Yeah.
This is so much more just like this person, this agent is right here, this chat GPT is right here, or what have you, and you're just working through it live in your spare time, and you can test it immediately because it's on the spreadsheet that you already have, and we've seen a lot of benefits from that too. So something that was spreadsheet work that took like 4 hours, we got the AI to help us figure out the right Visual Basic to input into the spreadsheet, and now it takes like 15 minutes
Yeah.
to do it all
Yeah.
together, right?
No, it's crazy.
So it's like a tool as a replacement for a consultant to some extent.
Yeah.
And then the third is there's new developments all the time, but like the third thing is we connected our FP&A tool via MCP into one of the chat services.
Yeah.
And we're training this agent right now, and it's really promising. But the whole idea is that as a finance team, we serve as business partners to all these different departments and leaders in the company. And part of our job is like just to help them make sure they're on budget, right?
Yeah.
So, hey, how much budget do I have left for Anthropic? How much budget do I have left for this contractor? How much budget? Like, and those are questions that we get and field traditionally via Slack, and we're looking it up in the system, and it. And sure, like the answering that question may not take that long,
Right.
call it 5 minutes, but it adds up over a day, over a week, over a
Absolutely.
month, and you might get distracted by that question in Slack because you want to answer it because it's from the CTO when you're working on something else. And what we are striving to build right now that's very promising is an agent such that now the CTO can ask the agent, and the agent would just give an answer like right away.
Yeah.
Right. And like that's the last that's the third thing that we're seeing that's like I think it's going to be really impactful because I've seen what this agent that we're training up can do, and we haven't released it yet fully, but it's looking promising. Yeah.
I mean, to your point, email used to be the preferred means. Besides walking up to someone's desk and asking a question, then it turned into email, and then email has turned into things like Slack. And I've been on calls with finance leaders, and literally in the middle of a Zoom call, they get a Slack message from their supervisor, and they immediately are like, they pause the meeting and they have to respond because that's the expectation. And not disrupting those conversations and finding ways to automate getting the answers to some of those questions. I mean, it's such a huge time saver, as well as, everyone knows that if you're in the middle of something and you have to switch gears in your brain and do something completely different, like then it takes a little bit of time to recalibrate. So then you're talking about productivity gains, efficiency, everything else. So I think that probably segues into this looming question that I get asked significantly of this existential risk hanging over the accounting and finance profession. Should finance professionals be concerned about job security in the age of agentic AI? What's your honest take on that?
This is a very, very complex question.
Yeah.
And I think this question has actually been answered over many years due to other technological advancements.
Mm-hmm.
And I think even though we're talking about this so much because of like AI and agentic finance or whatever,
Yeah.
the economy and especially in tech has been creating tools to automate accounting processes for decades.
Yeah.
For decades. The spreadsheet
Yeah.
was an automation,
Yeah.
right? Reconciliation tools, RPA, the ERPs as we've been creating. All of these things have over time decreased the need for like the menial, mundane, everyday tasks that like took up a lot of time for accountants and finance professionals over years. And this is just going to be a constant driver. People are always going to, I bet once upon a time you needed more people to build a house too.
Yeah.
Right. But then you created other tools that made it more efficient. And so like, I think like there's two schools of thought here. One is like, is it going to reduce the workforce entirely, or is it just going to make the workforce more productive? I think there's a little bit of a mix of both.
Yeah.
I think there's also this trend that and maybe you agree with me, but like more and more, especially CFOs of public companies and really any other company, the executive team is looking for a CFO that's going to be more strategic than
Hmm.
just doing the accounting books and records, et cetera. And so this hopefully like allows folks from the accounting side of the house, right? Versus like when I was talking about these CFOs, the backgrounds of a lot of these CFOs are, I feel like they're less from Big Four and they're more from a banking background, an investment banking background, or an
Agreed.
investor background, et cetera. And these tools, I hope, allow accountants to, I don't want to say like be finance professionals fully, but it allows them to spend more time digging into the reasons why these numbers showed up the way they did and
Mm.
what are the business drivers in the company that got them to where they are. And maybe there's an angle from the accounting professional to, I don't want to say describe differently, but just provide a point of view
Yeah.
on why the business is going in a certain direction based on their training, which is, sometimes a little bit, you know, I hate to say it, but sometimes there is a little bit more intellectual honesty from
Yeah.
the point of view.
Yeah.
Yeah.
No, I like to say, well, two things. First, the naysayers will say that in 5 to 10 years, unemployment goes from 7% to 20 to 30%. I don't think that's the case. I think to your point, the productivity gains, the efficiencies increases the throughput such that, the world of AI is going to open up doors and channels that we don't even know exist today, which creates more jobs, which create more opportunities for, yes, to do things more efficiently, but then the throughput increases. So people are busy doing hopefully more value added tasks. So I clearly feel that way on, the impact of AI on professional services, on accounting and finance. More broadly, your point I love on the CFOs, at least the strategic CFOs wanting to be more like an operational CFO. Well, you can leverage AI to, query accounting, finance records, and other things to get more knowledgeable in that regard. I also feel that the operational CFOs that maybe go up through the controller CAO routes have the ability to use AI to get more strategic as well, right? Using tools around, corporate finance and investor relations and other things. So this skill set gap that we oftentimes hear when someone's applying for a position and they're like, oh, I really wish you had public company controller experience, or I really wish you had IR, or you had, investor experience in raising capital rounds. Well, now I feel like folks are able to get the experience in their current roles such that they, will then be able to tick those boxes on the prerequisites for their next role. So I think you and I are aligned in terms of what AI is going to unlock for finance professionals going forward. And I think it's a positive spin as opposed to, the doomsday kind of glass half empty
I
perspective.
mean, that's what I think for sure. Yeah.
Yeah.
100%.
Yeah.
Yeah.
Well, we're almost at time. I always ask this question to the guests on my podcast to kind of wrap things up. That success has trade-offs, right? You make sacrifices. You focus your attention on certain things. If you had the opportunity to do it all over again, would you do it the same way you did, or would you do some things differently?
Um, I don't have many regrets, like in general, because I think mistakes that people make are learning opportunities. And how could I have learned them or been the person that I am, become the person that I am today, if not for those experiences and mistakes? So from that angle, I think like as cliche as it is, like I don't have many regrets.
Yeah.
Now, knowing what I know now, would I have done a few things differently? That's a different question.
Yeah.
Um, and if I could go back in time, there are certainly learnings that I have now on a lot of different fronts, whether it's a process that we created that didn't work out, whether it's something that we could have doubled down more on, whether it's, even from a business perspective, some strategic things that we could have gone in one direction versus another. Like, and maybe we eventually got there because of all those learnings. And again, going back to no regrets, right? How could we have learned that if not for all the testing and all that stuff that we did? but I'm not giving a very clear answer. But yeah, certainly. Like I think people would be lying to themselves if they didn't at least acknowledge that, like, I learned something. And
Yeah.
because I learned something, the next time something like what I experienced happens, I would do it a little bit differently, right? That's a different angle. So I think that's where I come from. I'm
Eh,
wiser. I'm more experienced,
eh,
and therefore, when a situation that arises that I dealt with before, I may handle it differently because of what I learned last time.
Erik, I laugh because I knew that you and I had similar perspectives on, the world, on our professions, on the value that we can add. After this episode, I am even more convinced that we're more similar than I even gave it credit for previously. And I call it the time machine question. And I literally talked about that on a call I had this morning of, I wish I knew what I knew now, 10, 15 years ago, and I could tell my younger self, oh, focus on this or do this. But, each of those were learning experiences that make me who I am today. And I like you, have no regrets in my career, only learning opportunities and taking that information forward. But Erik, I appreciate you spending the time with us today. Congratulations on the acquisition. Congratulations on building such an enduring company that was so attractive to one of the largest financial institutions in the country. I'm excited for the answer to the question of what Brex does for Capital One. I'm excited for your journey, and I'm excited for our continued friendship. Thank you for your time.
Thanks for having me on, Ravi. This is great. Thank you.